Before we get into it, if you enjoyed these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that.
All right, folks, here we are on Thursday, March 13th. We're going to take a look at Tesla today. So Tesla has been the talk of the town recently, so that we would come in and see where things are situated at the moment, what some levels might look like, and so on and so forth. First thing I want to look at here is actually without any levels, without any EMAs in the chart or anything like that, just looking at the volume and the motion off of volume. You know, we do see this significantly higher volume back in these days, right? These were consistently around the 200 million range. You know, these days we get a spike and it's like mid to high hundreds in the spiky area. You know, the recent spikes back here were about 200 million or so. But, you know, this big pickup in volume here did lead to this rush upward, right? Consolidated. And then here we saw another kick up again, gave it another rush up. And then a bunch of consolidation. And then we saw a kick up here. And then, you know, it sort of bumped it up a little, consolidated again, and then another big pickup in volume here. And that's where we saw this run, and then a kick up in volume here. That was just a few months ago, and that's where you saw that big run up toward 500. And then the volume pulled back a bit until relatively recently, right? So the last couple of days, again, it's not back up in the 200s, but it came up to almost 190 million. That was the day where it dropped over 15%, but you know, then it persisted, almost 175 million, where it sort of stabilized a little, up a little less than 4%, and then up over 7.5%. You know, still okay-ish volume, 142. But you know, these days here was like significantly lower than 100 million, right? So seeing sort of a little bit of a bump in volume the last few trading days, you know, it does make me wonder, do we see something similar to like this, where you had a couple day volume spike and things kind of settled a little bit, and then on the secondary volume spike, things just absolutely took off. I don't know if that will happen, but just looking at blank chart, just candlesticks and volumes, you know, I thought it might be kind of interesting to at least have in the back of your mind to say, okay, if we get a little lull in the volume here, even if that means a little bit more of a retreat price-wise, do we get a run kicking off the next volume spike? Or what does that look like? So we'll see, but I thought I would just point it out. That's not something we often just look at, blank chart and volume, but you know, it stood out to me as maybe having some value here. We'll see. I mean, also it has come down and filled this gap now, right here, this gap on this day. The high was 218.72, and the low recently here was 217.02, right? So it filled that gap, which, you know, there's an overlapping gap here as well. So, you know, something to think about there as well. That gives it sort of some want to say, okay, enough of the peeling back. We covered these volume gaps, and now we're going to carry on. Okay, levels wise, the nearest level that I have, 242.01. If it can overcome that, you know, I do think it has potential for some room to about 274 here, right? 273.89. If we get beyond that, there'll be plenty of levels to look at, but I thought we would just start there. The next one is probably, you know, psychologically, that's so close to 300. That's probably the next level that comes up, right? Things get kind of sticky from like 290 to 310 or so. 295 to 305, somewhere in there. And, you know, just sort of playing off of that psychological $300 level at that point. But if it can't zoom, if it can't get boomy, 222, and then if it peels back and gets a new low here, right, relative to this swing low here, we could see, if things get slippery, 206, 190, and then very slippery, 167, 138. I don't know if we get all the way down there, but I did want to put some more levels to the downside just to say, you know, obviously it's been headed down. And so if we're looking for catch zones, looking for potential support levels, there's plenty of them. And so I thought I would kind of share those. And if we get up toward that 300 level and folks want, we can come back and put in some price target levels to the upside, to see, if things turn around, if Tesla becomes the belle of the ball and not just the talk of the town. EMAs wise, this is why I've been pretty, I don't know, you could call it bearish, you could call it reluctant in terms of Tesla. EMAs wise, it's a pretty atrocious story here. You had, it lost the EMAs here. We had the bearish crossover, right? This is where I started calling it out, like, oh, this could get pretty dicey. Came down, and then it rejected off of the 8 EMA, right? Its first re-emergence into this 8/21/34 EMA string that we have. It rejected off of the shortest term EMA, which is, it's what screams, there's more coming, right? It screams it to the downside, it screams it to the upside, right? If it was coming down like it did here, right? It was up well above the EMAs. It came and it made contact, right? And it bounces. That's where it's screaming, there's a lot more to be had here. And you're darn tootin'. It sure did, right? That's where, if you jumped in off of that bounce, you could have jumped in about 337. And then a few weeks later, you could have been selling in the 480s or whatever. But yeah, it shows that it just wants to ride it. So it does it to the upside, but it also does it to the downside. So when it rejected off of here, yeah, it's just running it down. And, here's why I still feel very, very cautious on Tesla. It still has not made contact. Again, I guess this day, it looks like it probably made contact. This was on March 3rd. Okay, so we're 10 days past, 10 calendar days past when it last made contact with the 8 EMA, right? That's just the bare minimum of want to try to put in some motion, right? And when it had that bare minimum of want to put in motion, it rejected it, and it hasn't been able to muster the price action back to that 8 EMA yet. Now, we may see it making contact with it as soon as tomorrow. It's very close now. But my question is, does it get some motion through it? Does it reject off of it again? If it rejects off of it again, then I'm looking at those levels to the downside that we had put in, right? I'm essentially looking at what that approach toward 200 starts to look like. If it does get some motion through it, then start looking at, okay, well, what's it going to do when it gets toward that 21? Can it actually reach the 21? Right? Because that's the next level. That's this is really bad situation when it's rejecting off the 8. It's still a bearish situation if it's rejecting off the 21. It's just maybe there's less momentum that needs to be exhausted before it stabilizes or turns around, if it's at least getting to the 21. But that's the question, right? Can it get there? Right now that 21's all the way up at 290. So quite far away. And then, of course, somewhere in the picture here, don't know where everything will be situated when it sort of makes contact, but this gray 183, the all-important that I always, always, always preach about. What happens when it makes contact with that puppy? That's the big guy for me. I know different people have different time frames that they put in place, and da-da-da-da. People are looking at the 100, the 200, the 50, the whatever. I like the 183 EMA on the daily. And I say when the price action is below it, I consider that to be in a bearish pattern at the moment. When it's above, I consider it to be bullish. Here's what's getting really dicey. You've had the 8 EMA cross below the 183. You've had the 21 cross below the 183. Sorry, choking a little bit there. You've had now the 34 just screaming down toward the 183. So are we about to see the last short-term EMA, that 34 red guy right there, about to cross below the 183 as well, and then just have everything fully in a bearish formation? Now, does that mean it can't turn around? Of course not. It just means that it might take a lot more work. You might need more reasons, right? More catalysts, more fundamentals, more consistent good news, whatever it may be. Now, news-wise, this would be my worry if I were looking at news and catalysts and stuff like that, and I were a Tesla bull. I would have seen the White House come out and do sort of like this, resounding, I'm buying, as President of the United States, I'm buying a Tesla. And I implore all of, the Elon supporters out there, the MAGA folks out there, go buy yourself a Tesla, show your support. Okay. Now, I don't know how many Teslas they sold off of that. But in terms of like the stock, the easier thing to do than go out and buy a Tesla is to buy some shares of Tesla. And, so of the easier thing to do, all that we saw from that, like big display, was a rise of 3.79% and then a subsequent rise of 7.59%, followed by then a loss of 2.99%. So, it feels to me as though that should have been more convincing. Maybe I'm overstating it or, playing too much into the hand, but that was just my feeling. Now, I will say this. The degree to which Trump wants to be very, very useful to Elon in terms of keeping Tesla's stock price up, I wouldn't put it beyond any realm of possibility that if this continues to fall flat and that, I'm buying a Tesla, everyone else go buy Teslas too, support Elon. If that continues to show that, okay, that's not going to do it, I would almost look for a direct government to Tesla contract or a promise of a contract or speculation of a contract or a series of contracts that are just, we're going to have a whole fleet of Teslas here at the federal government, and UPS is going to sign a contract. USPS is going to sign a contract with them, and the White House is going to, Secret Service is going to, and just all of this stuff. Yeah, I would imagine that would skyrocket the stock price, and we'll see what happens. It's very speculative on my part, but I tend to think that if Tesla continues to dip and the news cycle gets well beyond that showing at the White House the other day, and therefore proving out like, okay, that didn't do it, I would almost be surprised if there isn't something just more concretely overt that comes out of, okay, the U.S. military is signing a contract with Tesla to do this thing for this many billions of dollars or whatever. We'll see. I don't know, but that would be something. Now, with Think or Swim wise, to get back to the chart, pretty decent call out here by the TTM squeeze indicator. We had a reason like a mid-range trigger, like not super lengthy, not short, and it already started to leak a little bit during the trigger, right? But then it fired on this candle we put in this day, and then on the back of that fire, then things really fell apart. So I'm going to say it's a pretty good call out. Also good call out here for the time being, at least for the ATR levels for March, right? It came right down to the -1 ATR of 222.21. I know it dipped to 217, right? But that candle wicked right up off of that -1 ATR level. And for the time being, it's catching resistance, sort of you could call it like a triple-edged sword. Here it has this ATR level that's catching resistance on, which is also the resistance level. It just happens to be where the channel, the lower bound of the channel is, and this red wave cloud is right there as well. So again, in terms of gusto, momentum, it's gonna need a lot of those things to get through. There's some heavy-handed resistance right there for sure. And like we were talking about over here, the 8 EMA is right there. So yeah, there's a lot of potential resistive factors there. Again, don't discount the potential for some wild news to come out. And would that overcome silly little resistance levels on a chart? Yeah, for sure. Okay, if it can somehow miraculously turn things around, the call trigger for March is 309.68 with a +1 ATR up to 363.75. So just know the range that's covered by the levels for the month of March only are 363.75 to the upside, all the way down to 222.21 to the downside, of which it has already met that criteria. We can see over here, for the moment at least, the April levels seem to stretch from about 312 to the upside down to 168 to the downside. So you can put those on your calendar in case we don't get tremendously higher or lower movement throughout the month of March, but there's a significant number of trading days left in March, so I would suspect that you're going to have some sort of indication one way or another that are going to skew those April levels before we get into April 1st. All right, folks, so I hope that you've had a good trading week, and as always, I appreciate you watching, and I will see you in the next video.